So what happens to the dollar if demand for the dollar falls? You can probably guess, right? It means that we as Americans are going to be able to buy less goods and services. The ripple effect of being able to buy less goods and services could have a profound impact on the United States economy, on everyday people. You all have felt the effects of inflation, right? Over the past 3, 4, 5 years. It's been no joke. It's impacted everybody.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis, ready to unlock the keys to a life of true abundance. We're diving into everything from financial freedom and optimal health to meaningful relationships, geographic freedom, and everything in between. It's about creating a life rich in experiences, purpose, and joy. Get ready for empowering conversations, expert insights, and real-life stories that inspire you to live abundantly. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
Secrets to Abundant Living podcast community, hello, and welcome to another episode of the show. I'm delighted to have you here. For those who don't know me, my name is Amy Sylvis. I am the founder and CEO of Sylvis Capital, and we connect investors to hands-off real estate investment opportunities. A lot of folks think that these real estate opportunities are just for the ultra wealthy and the most successful and might cost millions and millions of dollars, but actually our goal is to bring more of these investment opportunities to the average person, the everyday person who doesn't have millions and millions to invest, but wants to diversify outside of Wall Street. So we love to do that. It is September, y'all. I am just stunned with how fast time is going, but there's some really interesting stuff going on in the international markets, in the global monetary system. And I want to bring you all up to date very quickly so you all are informed. You may already know some of this information, but others of you, hey, you're just busy living your life, right? You're busy with your kids and with your career and hopefully enjoying more of life, your hobbies, all of those things that bring abundance to you. But I want to make sure you all know the really important changes that are happening on the global stage, because whether you like it or not, it is impacting your ability to accumulate wealth, keep your wealth, and maintain your purchasing power. So before we kick off this really serious topic, and we're going to try to make it fun and interesting, right? So it doesn't have to be a yawner. Y'all, college football is back. I could not be more excited. You all know I'm a big college football fan. I'm a big band dork. And USC played Missouri State on Saturday and scored the highest score that they have since 1930. So yeah, really proud. Great to see Jaden Mayava and Hussein Longstreet, both of our quarterbacks, out doing their thing. It was a blast. It was a scorcher. It was hot, but still got to see a lot of great people that I love to connect with at football games. So college football's back. If you're not a college football fan, sorry, we don't mean to bore you, but it is the most wonderful time of the year. And, it's always a great excuse to be on campus, to see lots of friends that we otherwise may not have a chance to connect with and, enjoy our college football band as well. I'm such a band geek. Did I play in the band? No. Do I have a child in the band? No. Am I just an enthusiast? Why, yes. Yes, I am. So people ask me those questions all the time, and I used to be a little bit sheepish because it seems a little weird. Like, hey, there's this 44-year-old lady fanning out over the band. I just think they're great. I think they do a great job bringing lots of spirit and enthusiasm to the festivities, right? All right, well, let's get down to our topic today. There's some interesting information. You all may remember our episode on gold and silver investments, gosh, probably well over a year ago. But our gold is coming back into the forefront, and as a monetary metal, as a way some folks decide to preserve and protect their wealth, I think it's important for us to revisit this topic. Now, you all may recall we've discussed the international monetary system and the fact that the United States dollar has this privilege of being the world's reserve currency. So, what does that mean? The world's reserve currency means, there's all sorts of currencies out there, right? There's the euro, there's the Canadian dollar, there's the Chinese renminbi, there's the Japanese yen, there's all sorts of currencies. But there's one currency that most countries use to trade with each other, even if they're not trading with the United States, and that is the United States dollar. Why does that matter to us? Well, there's a whole bunch of reasons why that matters. The biggest one is this increases demand for the dollar. So if most countries are trying to trade their currency into dollars, this means there's more demand for dollars. And if there's more demand for something, here's Econ 101. Who wants to tell me what happens when the demand for something, all things equal, goes up? Anyone? Bueller? Typically the value goes up, right? So the United States dollar is propped up artificially because it is the United States, because it is the world's reserve currency. So we're able to buy, as Americans who live and earn in dollar denominated assets, we're able to buy more things, more goods and services than we otherwise would be able to because there is such demand for the dollar. Now, there's a whole rabbit hole you can go down on this. And how did the US become the world's reserve currency? Well, there was this thing called World War II, and a lot of the top economies in Europe were destroyed, and the United States was able to get a whole bunch of gold from Europe because the United States needed to provide support to Europe. And how did they buy the goods and services that were needed from the United States? How did Europe do that? Well, they did it with gold. So the United States ended up, after World War II, having quite a bit of economic power because it had so much gold. So at Bretton Woods, the dollar was essentially pegged to gold, and then all other currencies were pegged to the dollar. Now, there's a little wrinkle there. So gold has a fixed value, and you may be thinking, no, it doesn't, Amy. It goes up and down and all around. No. The value of a currency moves around gold. So say, oh, gold is $3,400 an ounce. That means it increased in value. No, gold has bought the same amount of goods and services in 2025, in 2005, in 1905, in the year 1000. It's bought the same amount of goods and services. The currency around it goes up and down and is devalued. So at any time you see, at least priced in dollars, the price of gold going up, that just means the value of the dollar is going down, not what gold and silver can purchase in those terms. I hope that makes sense, but it's an incredibly important concept to understand. We're talking about the purchasing power of something, the purchasing power of gold. What can gold give you? The purchasing power of the dollar. What can the dollar buy you? So when the dollar was fixed to the value of gold, that was fixed, right? That didn't fluctuate, that stayed steady. And then other currencies were pegged to the dollar. In 1971, for a whole bunch of interesting reasons, because the American government was up to some shenanigans, the Nixon took the dollar off the gold standard. And that meant that all of a sudden, all currencies in the world were not pegged to gold, but were able to fluctuate. And what happened as a result is a steady devaluation of the dollar, meaning a steady devaluation of the amount of goods and services that can be bought for a dollar. That's a lot of monetary history, y'all. So hopefully you're not listening to me at 2x speed because I'm already talking pretty fast. But what's really interesting that I want you all to understand is the dollar, the American dollar's status as a reserve currency is steadily declining. So I'm going to show you a visual here. Have you ever thought about having multiple streams of income? Instead of relying on just one stream of income where you're trading your time for money, how would you like to free up more of your time and live a more abundant life? As a listener of the show, you're invited to attend one of our upcoming trainings where I'll give you an inside look into how you can add passive income and get all the other perks of recession-resistant real estate investing without the headaches of being a landlord. I'll also be sharing some hidden mistakes to avoid and the criteria I personally look for when evaluating potential investment opportunities. To reserve your seat for free, go to sylviscapital.com/webinar. Again, that special link to reserve your seat for free is sylviscapital.com/webinar. I look forward to seeing you on the training. And now back to the show. If you're not watching this on YouTube and if you're not watching this on Spotify, I'd recommend that you go ahead and grab this episode here because this graph is really, really important. And it's from Money Metals. The source is the IMF. And essentially what it shows us is the international reserves held across the world. So we can see up until, I would say 2005 to 2020, right before 2020, the United States dollar represented here in red was the majority of the world's currency that's held on reserve across the world. What we're seeing since COVID, since 2020, is this creep up of gold and less of the United States dollar being held as reserves. So this chart goes all the way back to right after World War II. So that's when the Bretton Woods system was put into place. And you can see still there was quite a bit of gold. Gold was the majority of the world's reserve currency from after Bretton Woods up until Nixon took the US off the gold standard. But the dollar has really, really crept up, not in a straight line, but since the 70s all the way until the mid 2010s has held the majority of the world's reserves. And as I mentioned, that's changing and it doesn't look dramatic, but it's important because as I mentioned, what enables us as Americans to have such a great standard of living? Yes, we've got a powerful economy and, all these other things, but we import a lot of goods and we're able to pay for services abroad very cheaply because the dollar buys us so much and is so strong. So what happens to the dollar if demand for the dollar falls? You can probably guess, right? You can say it to yourself, say it out loud. I'll give you a minute. It probably means that we as Americans are going to be able to buy less goods and services. The ripple effect of being able to buy less goods and services could have a profound impact on the United States economy, on everyday people. You all have felt the effects of inflation, right? Over the past 3, 4, 5 years. It's been no joke. It's impacted everybody. And inflation, basically the ability for the dollar, buys less goods and services is a regressive tax. So those who are less wealthy, who are lower on the economic spectrum, suffer tremendously, a lot more disproportionately than, those who are wealthier. So this could have profound impacts on us. And I'm not here to preach doom and gloom. This is the Abundance Podcast. We believe that there is abundance. We don't believe, we know. But the way that we know is we educate ourselves, we understand, we keep up with what's going on, and we understand what tools are at our disposal, what levers we can pull so we can protect ourselves. And, I talk about real estate. It's no secret. I run a real estate private equity firm, but there are all sorts of assets that can provide tremendous protection and a hedge against inflation, including gold and silver bullion. So I'm going to link you all to my previous episode about gold and silver so you all can learn, if it's interesting to you, some things to look out for, tips and tricks on how to acquire. Again, none of this is financial advice. This is simply education. We don't ever give financial advice. But this goes back to the diversification that we talk about a lot here of what is the value of diversification as investors and as people who are seeking abundance. Well, diversification means we're invested in assets that don't necessarily go up and down together. Actually, maybe their performance is exactly opposite. So that can help us smooth out the performance in our portfolio, smooth out the dips and smooth out the peaks as well. So the peaks and valleys. We talked about the fact that paper assets, statistically speaking, are positively correlated. Nothing wrong with them. This is not a statement saying you shouldn't invest in paper assets, but hard assets like gold and silver, like real estate that cash flows, commodities can do better in preserving and protecting our wealth during times of high inflation. And a devaluation of the dollar because of less demand, because countries are turning to physical gold as a reserve as opposed to the dollar, is something I'm personally considering. I mean, I've always had gold and silver bullion in my portfolio, but it's important for me and my family to understand what may be coming down the pike in terms of the global monetary system. So, does this mean we all need to run around screaming and shouting, hoard cash underneath our mattress and sell off everything and go into a bunker? No, absolutely not. But will those of us who study the changes in the monetary system perhaps put ourselves in a spot where we're better protected from decreased purchasing power? It's possible. It's very possible. And we're seeing around the world massive debt on a country level. It's not just the US, y'all. So it is not just us, it is definitely Europe. Unfunded liabilities. So the Social Security, Medicare that are wildly, wildly underfunded, but that, chickens will come home to roost there. In this woman's opinion, the writing is definitely on the wall. And hey, if you study monetary history, ever increasing debt and ever devaluation of the currency is just baked into the monetary system. So this isn't a Trump issue. This isn't a Biden issue. This isn't an Obama issue. This isn't political whatsoever. This is above that, y'all. This is the monetary system that exists regardless of what political party is in power. So if the monetary system means we have to continue to create more and more debt in order for it to survive, and that leads to more and more of the currency, which means, hey, raise your hand. What happens when there is more of something? Usually its value decreases. So if we have more dollars in circulation, all things equal, the prices of goods and services are likely going to go up, denominated in that currency. The next couple of years may be interesting. It may be really interesting. So I wanted to bring that to your attention. This is a bit more of a technical episode. I'm going to put a few resources in the comments if you're interested in learning more, if you're interested in doing a deep dive. But again, not financial advice, but rather an introduction and a just top level communication and education around what is shifting in the international arena as it comes to global reserves, what those consequences may be to us, and what we may be able to do, what I'm doing. You don't have to do it. I'm not telling you to do it, but what I'm personally doing in terms of making sure I have some of my portfolio in hard assets so that I can hedge myself against what may be higher inflation, especially if interest rate cuts are coming. We know inflation is already not very low. So cutting rates, not a political statement, but that may make inflation come back. I want to hear from you all. Is this sort of information helpful? Is this a little too detailed in the weeds? I would be really grateful if you all would comment on wherever you're listening, Apple Podcasts, YouTube, Spotify, and keep me in the loop in terms of how valuable you find this information. You won't hurt my feelings if you don't think it is, but I spend a tremendous amount of time researching these episodes, obviously getting folks to help me edit, produce, release the episode. So I want to make sure this is something that's valuable to you all, and your comments really help. And of course, subscribe to our channel and share any videos with your friends that you think are interested, because we'll be stronger as a country if all of us understand the monetary system and what we can do to protect ourselves from likely shifts that we're seeing coming on the horizon. All right, y'all. Well, this is a little bit of a different episode, but thank you for listening. And I cannot wait to read your comments. Hope you have a very abundant day, and we'll talk to y'all soon. Bye for now.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Sylvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.